Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is October the 19th, 2018. Strong hand. Like the shirt says, long-term thinking. All right, obviously, I'm so pumped. You know, at the beginning of this week, there was some drama, there was some craziness, and then it kind of died down. But now, all of a sudden, I heard about some Bitmain drama. We'll talk about that. But these three guests, they can handle it all, from Bitcoin Maximalism to Fidelity to everything, to Tether FUD. Oh, my God. We'll talk about it. So you guys all know Federico, Tenga in Italy. You know Marty, Bent. And maybe, do you guys know Jeet? Because Jeet is freaking awesome. If you've been following my show, I've been talking about his Twitter feed that you all should be following. I linked to all these guys' Twitters below, okay? So right now, everything that's talked about on the show is also linked to below. Check out the notes always. Follow these dudes. We're going to start it off with Jeet. The Fidelity story was a big story. People were saying at the beginning of the week, you know, as the institutional money is on its way, and you know, eventually the institutional money is going to come in, as we all know. We should be patient. But what's your take on Fidelity, G?
Yeah, Adam. So first, thanks for having me on, man. I'm a big fan of the show. My take on Fidelity is probably a little bit contrarian to what everyone else's take is. We've been hearing about institutional money for a long time, but I don't think people have a good framework for understanding what it really means. If you look at the products that Fidelity actually, announced that they're having, it's kind of an institutional custody solution. They have an execution trading desk, and some, kind of what seems like an advanced customer helpline for institutional customers. They've got questions on cryptocurrencies. So I think this is less the institutional money coming in and more of a kind of a mental land grab from Fidelity, because they're one of the most well-known companies in finance. They have all the people's 401k accounts. This is their attempt to say, look, we've already got all these existing customers that are interested in going into cryptocurrency. Let's make sure that, when they think of cryptocurrency, they think of us instead of taking their money and going elsewhere to somebody who has both the traditional stuff and the cryptocurrency stuff. So this is them more defending their flank than setting up a massive investment and, onboarding a ton of new institutional customers. I think the bigger story was the David Swensen investment in the two crypto hedge funds. I can go into that, or
Yeah, please tell us more.
Yeah. So I think, if you think about custody solutions, there've already been kind of janky custody solutions available, and you have people investing in these hedge funds, which is fine. But if you think about what an institutional asset allocator thinks about, they have specific frameworks that they use for investing money, and they manage trillions and billions of dollars. The most prominent institutional investor has really been David Swensen. He's the guy. He came up with what's called the Yale Endowment Investment Model, and he's famous because he kind of took a really contrarian approach a long time ago to switch from whatever they were doing before to massively move into illiquid equity, so stuff like private equity and venture capital. And he made amazing returns based off of that. So now people basically blindly follow that model because they know that it works. So I just think that in contrast to Fidelity, where people are already doing that, it's not clear exactly what it means. David Swensen is the guy. He's like the smart money's smart money, and he's the guy who's made these types of massive switches before, and it's changed everybody's decision making. If I'm like the young person in one of these pension funds or sovereign wealth funds, and I want to go in there and talk about Bitcoin, it's kind of a difficult conversation, because as soon as you bring up Bitcoin, somebody's going to start clowning on you, like this is the asset that was down 70%, and all the other FUD that you hear about. But if you can go in there and say, look, there's obviously a lot to learn, but David Swensen has made these types of decisions before. He's interested in crypto now. We know that people blindly follow David Swensen. So if everybody else is going to be looking into crypto, I think we need to at least take a look, and let's just start having conversations about it. And so I think the types of conversations that people are going to have now are going to be completely different than beforehand, because you have somebody with a big brand name like that, and so people are going to be worried. Like the conversation is going to shift to, well, can we get allocations into the best funds versus talking about should we be in the space. So I think it's kind of a different conversation that's going to start to happen now, and I think that's a much bigger story than another on ramp.
Okay, that is a great take, Marty. A lot was just said. What do you think about all that?
No, I tend to agree with most of what Jeet just said. If you watch the live stream of the conference where Fidelity made the announcement, I actually think Novogratz made a couple of good statements to try to calm everybody's nerves who might like jump to call a moonshot after an announcement like that. They basically said it's going to be a slow trickle at first. It's only going to be opened up to their clients, and it's going to take time for them to get used to that. And coming from Fidelity, it's not surprising. This is a company that's been experimenting with Bitcoin mine, is known to experiment with Bitcoin mining in the past. They've had their employees buying coffee with Bitcoin in the cafeteria. They found that maybe the confirmation times and the slow block times might not be conducive for buying coffee on the main chain. So they've been playing and messing around the space for a while. So it just makes sense that they would take it to the next level and try to be first to market. It seems like they've definitely been doing their homework and have a really solid team there. So excited to see what happens as they roll it out. But like Novogratz said during the live stream, like I think it's going to be a slow trickle at first. This is an asset class that millions of people still have to get used to. It takes rewiring of brains to sort of wrap your mind around the whole concept of Bitcoin and a sovereign digital currency in the first place. So baby steps here. It's a good sign. Yeah, so it's positive. It might not lead to a crazy price surge in the near term, though.
And again, long-term thinking, people. don't expect there to be some, because of a press release, there to be a great surge in price in terms of dollars, and then be disappointed when it doesn't happen. Just wait. The institutions, they will come, and you'll be happy. Federico, out in Italy, any institutional talk? What's your take on all this?
In Italy, nothing that I am aware of. We are not. Institutions are not really keen to invest into this kind of very innovative assets like Bitcoin. But in general, I kind of agree that there is too much hype about this. We already had the different cycles of hype about institutional money. I remember at the also in the very early days with the weekly twins announcing that they were going to do the ETF. Then we had last year the Chicago Mercantile Exchange. We have multiple apps, and none of them really had any impact in the short term. So I'm expecting some kind of organic growth of adoption from institutions. So whenever I see those news, there are positive news, but I believe that if they have an impact, it will be in the long term, not in the next few weeks or month or something.
All right. Long-term thinking, people. Pound that like button if you're liking the show so far. All right, so let's turn it to Bitcoin maximalism. Since we got Federico talking, you've been tweeting about maximalism a lot this week. A lot of people have been tweeting about maximalism. Give us your take on Bitcoin maximalism and the current state of Bitcoin maximalism.
I think Bitcoin maximalism is a very weird topic. Because also the way the concept of Bitcoin maximalism came about, I believe that at the beginning, the very first, it was Vitalik that already made the term Bitcoin maximalism mainstream, and was kind of a way to attack the parties that didn't agree with Ethereum, oh you're an extremist, you're a Bitcoin maximalist. But then people started to enjoy it, and the idea is that many people join Bitcoin because of the monetary value of having a convergence towards a single currency that is not controlled by anyone. And the very idea of the utility of a currency comes from the fact that you have only one, because you have only one single asset that you use to trade with any other asset. So that's the utility of a currency. So obviously, many people don't believe that we can have a war with multiple competing currencies, because the incentives are just not there. It just doesn't happen. Usually in any country, there is only one main currency, and there are very rare cases or very particular situations where there are competing currencies. And this is how the motivation behind Bitcoin maximalism is that you may also have some interesting alternative coins, for example, many people like Monero because of the innovation in privacy. Still, even if it is cool tech, it has not the ability to become global money, because we can only have one global money, and Bitcoin has such an advantage in terms of network effect that it's very hard to close this gap. So this is like why Bitcoin maximalists are very skeptics about altcoins. And then somebody started to attack very, maybe sometimes too aggressively, in too aggressive way, founders of altcoins like Monero, Litecoin, Ripples, etc. And the motivation of this aggressivity is because Bitcoin maximalists believe that people that put money in those coins like Monero, Litecoin, also those that may sound legit, they will eventually lose money, because Monero is cool tech but has no ability to become global money. So if you promote Monero, actually there are the Monero community is very good about not promoting it much. So maybe I should do another example like Litecoin. If you promote Litecoin as they used to do with Litecoin is digital silver, and you are pushing people to invest in something that has not the ability to become global money, has no other use cases, so they will eventually lose money. So this is why Bitcoin maximalists became aggressive, and many people found this kind of attitude. They didn't really like it. So recently we had all these attacks against Bitcoin maximalists. But I really don't see like what Bitcoin maximalists are supposed to do. Like, if I'm a Bitcoin maximalist, I believe that there can only be one global money. I don't really care about all those altcoins. Some of them may have like interesting tech, but I don't really care about them too much. What am I supposed to do? Am I supposed to buy them, to promote them, to be nice to people that promote things that I believe will eventually make people lose money? So I really don't see what the people that attack Bitcoin maximalists really want to take out of this. What is their end goal? So yeah, this is my take. So if you guys have other opinions.
Your fellow Italian, Giacomo Zucco, because people have been trying to paint the Bitcoin maximalists this week, especially as extremists. And he made a whole new scale that on one side of the spectrum, you've got the no coiners. And then on the other side, you got the multi-coiners, and Bitcoin maximalism is just in the middle there. That was an interesting.
Yeah, I totally agree with that, because it's true that actually Bitcoin maximalists sounds like they are extremists because they are extreme into all this single coin. But actually, it's like the moderate middle. You have those people that not all coins are bad, that they are all scams, that they're very extremist on this side. Then they have other people that all coins are good. We can have a war with multiple coins, multiple chain. There is space for everyone, which is kind of extreme on the other side. Then you have Bitcoin maximalists that say, okay, not all coins are scams. Not all coins are legit. We cannot have a war with multiple competing coins for every kind of use case. You have a different blockchain with a different native token. And so, it's not actually an extremist position. I agree. Actually, it's actually a very moderate position.
All right, let's go to Marty here. Bitcoin maximalism. Why has it been in the news lately? Are people just bored? And is it painted in this extreme way? But is the reason because some people can't take the harsh language that some Bitcoin maximalists use? What do you think's going on here, Marty?
I think it's probably mainly driven by people being bored out of their minds because of the market. But this is an ongoing thing. It's pretty annoying. And it's an argument that's been had thousands and thousands of times online, on YouTube, or podcasts, wherever. At the end of the day, it's I think Pierre Rochard said it best. It's descriptive. It's not prescriptive. We're basically coming to the conclusion that. So me personally, I don't like to paint myself as like a Bitcoin maximalist. Not a big fan of labels, but I probably would recognize as one, given the definition other people would give to it. But from my view, like Bitcoin only needs to do one thing well, and that's enable distributed peer-to-peer censorship-resistant transactions roughly every 10 minutes. And that one simple function will enable a lot of complex things on top of that. I do not I think a lot of people want a lot of things out of the box with Bitcoin, and like you said earlier, patience is key. And what people don't realize is it takes time to build these things. Like I wrote about it earlier this week. Matthias, some guy in Berlin, he had a proof of concept of a bike that you could rent with Lightning and do microtransactions with that. And that was an example of something that I think it was a company that was going to be launched out of the DAO when they raised money for the DAO originally. So it's like ideas that people thought Bitcoin weren't going to be able to fulfill. It just turns out it's just going to take time to build out the infrastructure and at the protocol level, and then on the layers above that to get to that point in time. And we're getting there slowly but surely. And yeah, so I think as a Mac, like that's all I care about right now is Bitcoin does what it marks it will do. It's getting more decentralized as time goes on, I would argue, which is a positive to see. And it definitely has the most asymmetric upside, in my opinion, out of any of the other coins. So that's why I pay attention to it.
All right, most excellent. Jeet, give us your unique take on all this.
Yeah, I'm pretty much in agreement with both the guys there. I think the reason why it's, you're seeing a lot more of it talked about is there's a couple of people on Twitter who've been extremely active. If you look at the way that I think the way that media happens is you have forums like Twitter and Reddit, and people are arguing back and forth with each other. You get some interesting content, and then people start reporting on it. So one of the pieces of content that, or I guess there's a couple of guys. One's like Panic, the other one's like Furtispy, I think is his name. So yes, those two guys are just super active, and they've got interesting takes and everything. But I mean, I think they're really good at turns of phrase. But I think ultimately what it comes down to is like Bitcoin maximalism is not some controversial thing where we're trying to tell everybody what to do. It's actually extremely non-controversial, where we're saying, look, we've solved the problem of peer-to-peer internet cash. We have magic internet money that you can save into, and nobody can stop you. So you can now do whatever you want with it. We're not going to make decisions for you. I think what's happening with a lot of the altcoiners is they're kind of triggered because, like, when you point out some of the scamminess of the altcoins, it reduces their ability to bring in noobs and, dump on them eventually. And then I also think that just in general, even the stuff that's less scammy and just less like a straight up, con job, there's stuff that just probably is not going to work out. And, people are setting unrealistic expectations for the retail traders, and they're setting themselves up to win ahead of time, giving discounts to hedge funds. And then, again, dumping on retail. Then you have existing projects, something like Ethereum, for example. There's a lot of people who are doing some really interesting development work on Ethereum, but at the same time, if someone's out there promoting it as a competitor to Bitcoin, that's just not realistic. And Bitcoin is something that works now, whereas something like an Ethereum, there's like 6 different steps, and then an undefined thing where they figure out proof of stake before it actually starts working, as they've stated. One of the things that I often say on Twitter is like they're always like one fancy project name away from figuring out proof of stake. So I just think that it's important to be realistic, and I think if you meet Bitcoin maximalists in person, I recently had a chance to attend like one of the meetups. Everybody's pretty calm. We're all just chilling. I think the idea that we're an intolerant group of people trying to force our ideas on other people is just not realistic.
All right, you've got there were some slight allusions in there to maybe someone that's been in the news that is definitely not a Bitcoin maximalist, who's definitely a no coiner, and we were talking about it beforehand. Roubini, what? Tell us about Nouriel Roubini. I'm butchering his name, please. Your thought.
Yeah. So I think he's a guy who gets a lot of press coverage. I mean, there's an entire group of people who called the 2008 financial crisis, and they have an entire career. They can write as many books as they want. People will buy them anytime they want to show up on the news. CNBC will host them, give them prime coverage. They can get paid speaking jobs at conferences, and they basically have made it. Now, the thing is, if you go back and if you look at them as, you got to understand that it's a common thing that people do is call the top of the cycle. So if you're the guy who calls the top of the cycle, you end up doing really well. You end up like these people who get to go on the speaking circuit. But if you look at his track record, in terms of, from an investment perspective, like, should you be following this guy's investment advice? He's called the top of the bubble, every 6 months. He's always calling the top of the bubble. not specifically for Bitcoin, but just for stock market, for anything that he's looking at. When he's right, he erases the history of the rest of the stuff and gets to go on CNBC and pitch himself as this like savant that can completely predict the market. That's just not the case. Here, I think if you look at how aggressive he's been and how he's just kind of, I mean, this is a guy who's supposed to be a paid professor at NYU. And if you look at his Twitter feed, there's like a new tweet every hour. So, I think the students at NYU should be looking at him and be like, are you trying to establish yourself as a media personality or teach? So I just think that, he's a guy who's a loudmouth. He's trying to call another top. If Bitcoin goes down 10 or 20%, he's going to give himself another, 6 months of being on CNBC.
I call it he's a big crypto noisemaker. I don't like to give those dudes too much attention, but hey, it was in the news. You wanted to talk about it and everything. Yeah. Marty, did you have any? You've obviously heard about this dude. Any thoughts on it, or has he jumped the shark?
I mean, I think he's definitely jumped the shark personally, but I think I just think the fact that he was tapped by Congress to come testify on behalf of like Bitcoin, to testify against Bitcoin was like the most astonishing thing to me about Nouriel the last 2 weeks, is that he is the man representing sort of Bitcoin and cryptocurrency to Congress and trying to explain it to them. Like it sort of blows my mind that he had like 95% of it right, and he was calling out scams and calling out Ethereum when he was testifying. But then when it came to Bitcoin specifics, he was way off base and really didn't have the facts straight at all. So the fact that they brought him in to represent a voice in the space just like really bummed me out. I was like, all right, our government doesn't even know who to find to teach them on this subject.
What do you expect from the government? Come on.
Yeah.
they don't know about anything. This is typical to pick someone like, but sorry to interrupt you. Yeah.
Yeah, no, I mean, it's all noise in the short term. He's going to scream. He's been screaming for years. It's not a big deal.
Yeah, guys. So have your strong hands. Don't let a guy like that weaken your hands. I know there's a lot of new people watching this. We have 336 live viewers right now. So everybody, pound that like button and check out the link below. You can watch all my old shows all of the old shows of This Week in Bitcoin. We do this every week. Techbalt.com, TECHBALT, and disruptmeister.com. I post a new show every day there. Federico, do you have any thoughts on this, Nouriel, or have we just given him too much attention?
Well, actually, the funny thing is that I actually agree with many of the things you say, like all SEO scams, most of the scam shitcoins out there are scams. So yeah, this is quite funny. But yeah, I think his motivation, I think he just realized that having an extreme opinion on a not topic like cryptocurrency is a good way to get a lot of visibility. So I see now he's getting invited to conferences, to CNN, to national TV. So, and he's probably getting paid some good money to do that. So yeah, I think he was just like, he just figured out that it was a good marketing strategist to promote himself as a personality with an opinion in the space. So now they will keep inviting him to conferences and to even to the U.S. Senate, Congress, it was the Senate Congress. So yeah, I think that's just that. He's not even maybe that convinced about what he's saying, but it's just a smart move for his career.
Yeah. Well, something something that's been brought up a couple of times here, Ethereum. So we've used the word Ethereum a few times, and it jolted something in my mind that I think, Marty, did you tweet about the Constantinople delay? Was that you?
Yeah. I mean, I've been tweeting about Ethereum's transition to POS for well over a year. I have a thread that links to a Nassim Taleb quote from the Black Swan, in which he sort of describes, if you give a project a deadline, the closer you get to the deadline and the project not being completed extends it to the future. And the longer you're extending the deadline, the longer you'll be expected to wait to finish a project. And it reminds me a lot of what's going on with Ethereum's transition to proof of stake. And yes, the latest line in proving that thread correct was the Constantinople hiccup on the testnet. I believe they tried to hard fork on the testnet, Roston, I believe it's called. And at first, it just didn't work. There was no miners to mine the chain on testnet for a few hours, and then when they finally did mine a block after a few hours, it split into three chains between the Geth parity and another implementation. So it seems as though they're taking a step back to sort of reevaluate how they're going to go about this hard fork, and it's delayed a bit further into at least 2019, I believe.
Well, I'm glad we got to talk about this, because I haven't heard that many people talking about it, actually. And again, I'm a Bitcoin guy, but we got to see Ethereum is a big player in the space, and when these delays happen, they should be brought up. Jeet, do you have any Ethereum thoughts?
Yeah, I know. So I think Ethereum's really interesting, and the big issue is I wish Ethereum was just like any other altcoin, because you could just dismiss it. But the thing is, there's actually like the developer. I mean, what they've done really well is welcome developers. So there's a lot of like young kids who are like learning about cryptocurrency. They're learning about how to code through using Ethereum, and I think that's awesome. Now, I would just separate developers and things that developers are working on from criticism of the protocol itself, because I think what you want is people running experiments at very little cost. So somebody who's in their 20s, working on an Ethereum project and seeing if something works, and then failing, and then trying again like 600 times within a year until they find something that works, and then it becomes massive. That's like the ideal situation. What you don't want is something like a multi-billion-dollar protocol like Ethereum running experiments very slowly, because then it's kind of put itself in a weird position where proof of stake has not been figured out. In order to figure it out, they need to run experiments to kind of fail enough times that they succeed. But because there's so much value at stake, they're kind of hesitant to run too many experiments, and then failure after failure is in the news or whatever happens. Like they're just kind of hesitant to run and take the risks that you need to figure out proof of stake. But at the same time, it's just kind of this weird. They put themselves in this weird dilemma, I think. And yeah, it's just a tough spot to be. Like they couldn't help it that the price ran up so much. But now, if they run too many experiments and they try too many crazy things, the value of the protocol goes down. On the other hand, if they don't, they're just gonna. I mean, they're in this weird situation. They're gonna constantly, like Marty said, be pushing that deadline out, because it's just very difficult. And side point, the way that you run a project is, like I said, small experiments, like figured out, fail quickly, and you keep things simple. Like, so the big value in Bitcoin for me is, like we said earlier in this talk, there's really one thing that it does. It does it extremely well, and nothing else matters. So it's very easy for everybody to organize around that. It's kind of like the law of gravity. Like, all right, I know if I drop something, it's going to fall at that rate. So we can all organize our lives around the law of gravity, for example. Bitcoin, the inflation rate, everything is already set already. So like, it's not something that I need to think about. I don't need to worry about it. On the other hand, something like Ethereum, they're running experiments to get the protocol to work in the first place. But in the meantime, they've got like 6 different ways they're thinking about doing it. Everything is super complex. It's not clear. Like, I wouldn't feel comfortable putting too much money into Ethereum, because like it could change the next day. Next day the inflation rate could go up to 10%, and you just don't know. And so I think the level of complexity that they're putting in there, it's just hard for the normal average retail investor to understand, and the normal developer to understand. I think if you ask the average developer, they wouldn't be able to tell you, they wouldn't be able to explain the development roadmap or anything like that for Ethereum in great detail, because nobody actually has it figured out. So I would just criticize the way that they're, the complex way that they're doing this. And I just don't see the line of sight to finishing proof of stake. Whereas with Bitcoin, I'm good to go now even. And yeah, we're gonna have some cool developments along the way.
Bitcoin, good to go now. Pound that like button. I love it. It's apples and oranges, people. Ethereum and Bitcoin, they're not direct competitors. They really aren't. But people simplify it to a point where they're direct competitors, and the people who like Ethereum got a bat. No, they both can exist. One is about the law of gravity, keeping it simple. The other one isn't too simple, and hey, let them experiment over there. That's great. Ethereum, do what you're going to do. Federico, do you have thoughts on this? Obviously.
Actually, I disagree with this, because I think Bitcoin and Ethereum, they have a very similar goal, which is programmable money. And they're just approaching the problem in 2 very different ways. Bitcoin is to do a few things very well. So you have a very limited scripting language that is not really complete, that you can do a few stuff with it. I mean, you can do more stuff than people think, but you don't have the expressivity that Ethereum has. But what it does, you can formally verify it, so you're sure that you don't have bugs like the party bugs or the DAO bug, that kind of stuff. With Ethereum, you can pretty much do everything, but it's hard to predict the behavior of the code you put on the blockchain. So you have all those kind of problems that we all know about. So I think that the good thing about Ethereum is that it showed how the design choice of Bitcoin were actually very good. So the idea of not using a Turing complete language for smart contract, it was a good choice. That I remember, like before Ethereum, people were discussing that it would have been cool to have a Turing complete language on Bitcoin. Ethereum showed that it has a lot of problems, and also like other minor thing, also the fact that Ethereum is account based versus the UTXO based structure of Bitcoin. I think it showed that the UTXO based architecture of Bitcoin is much better for second layer solutions. So it was a good design choice. So I think that's the main good thing that came from Ethereum, was to show how you could do things differently, and why it would have been a bad idea. And also, I'm not following the Ethereum environment that much as I used to do in the past, because I'm trying to focus more on Bitcoin, because there is already enough stuff coming out in Bitcoin every day that it's hard to keep up. But yeah, from what I see, they are having some very serious struggles with scalability. Their problem is much more serious than Bitcoin scalability, because they have all these smart contracts running on chain, so they have to solve it faster. But at the same time, it's much more difficult to solve it, because there is you can't use something like the Lightning Network so easily on Ethereum, because you have all these smart contracts that have to be run by all the nodes in the network. So they have a bigger problem that is harder to solve. So I'm expecting that right now it's already very, very difficult to run an Ethereum full node. So I'm expecting that maybe already in 2019, Ethereum will be under a very serious pressure, and we will simply struggle. It will have many network problems. So it could be very bad, both for people developing on it. I already heard of many Ethereum developers that are quite annoyed by the fact that they cannot even run their own full node anymore, and other kind of problems they have. So it will be a bit better for developers, and also for all those applications that are built on Ethereum. They won't really work that well anymore. Also because if they grow in adoption, the problem will be even worse. So I don't know. I think to see how Ethereum will deal with all this problem, and if he will manage to solve them, or if he will fail miserably. In both cases, it will be something very interesting to follow.
All right, we've said a lot about Ethereum. Marty, since I started with you with Ethereum, do you have any things you wanted to add before we move on?
No, nothing too much to add. Yeah, I just think what Jeet said, and Federico as well, about their long-term path is sort of undefined, and I don't find that bullish or advantageous at all.
So let's think a little long-term here. What's down the road for stable coins, Marty, and Tether? What's the latest? Are these gonna be major players in the ecosystem forever, or is this FUD? What is up with this Bitfinex guy? What's his? I've noticed the premium, the Bitfinex premium has gone down now. It's the difference in price in terms of fiat between buying Bitcoin on a regular exchange and Bitfinex. The spread isn't as much anymore. What is your latest on Tether and stable coins and all this drama?
It's certainly some good drama. That's for sure. Yeah, it looks like Bitfinex has been in the process of bank hopping. It seems pretty hard for them to get banking. They are doing things that are not legal in the US, and Tether is sort of a way to skirt that and skirt the fact that they can't get good banking relationships. I don't think Tether is tenable in the long term. Stable coins, in my mind, are only stable until they aren't. They're highly susceptible to black swans and are probably more unstable than a lot of people think. And I think the proliferation of a lot of stable coins will actually make stable coins unstable as well. Like just the fact that there are more and more of them, it's sort of you're fighting for the throne of stability, and that can lead to some weird things on a market basis. And yeah, I think they're a fad. I don't know if they'll be here in the long term, just because I don't think they're viable from an economics perspective. Nothing can really. It's really hard to keep a peg. We've learned that via economic experiments throughout time. So yeah, these things will only be stable until they aren't. With Bitfinex and Tether in particular, I don't know. It's been the ongoing story in Bitcoin since its inception, as exchanges have been shady. It's not a good place to keep your Bitcoin usually, and they'll do weird things to keep themselves in operation. So just take care of your own neck. Make sure you have your private keys in your possession, and you shouldn't have to worry about anything else.
Great point there. So I just want to clarify, everyone said there, a lot of people like to create drama around this because they say the Tether story is a big Bitcoin story. But I mean, Marty, what do you think? If Tether did disappear tomorrow, I mean, isn't Bitcoin still going to be Bitcoin? Nothing's going to change. I mean, what would you, if Tether goes down, what do you foresee?
I mean, I think if Tether goes down, Bitfinex goes down with it. So they're sort of tied at the hip. It's vice versa, same thing. Definitely be like a Mt. Gox situation. It'd be probably bad news. Price would tank a little bit in the near term, but like you said, long term, it's really not directly connected to Bitcoin at all. Bitcoin still produces blocks every 10 minutes and has no idea what Tether even is. So yeah.
Exactly. Federico, what you've got some Tether thoughts over there in Italy?
Well, I think like the situation of between Bitfinex and Tether is very weird, because you have Bitfinex, which is a very shady company in the sense that you don't really, nobody knows really much about them. They don't really have an headquarters. They have, I think they have an office in Taiwan with like 20 people or something. Then they have other people working remotely. So they have the company, I think, is incorporated in Hong Kong, but nobody is really there. So you have this very shady company, and then they have a complete transparency on the USD ledger, which is Tether for them, which is the opposite of the other exchange. You have, for example, Bitstamp is a very solid company. They have a license in Luxembourg. So they are well incorporated. You know who they are. You know what they're doing. But their USD ledger is completely private. You cannot see anything about the movement of USD dollars inside Bitstamp. So nobody can ask questions about if they are solvent or not, because nobody can actually see anything. So with Tether, people can ask questions, there can be FUD and stuff, because people can actually see what happened on the ledger. I think the problem with Tether is that it's actually too transparent, because the situation is not very different from any other exchange. That they have this USD ledger that maybe is backed by real dollars, maybe it's not. But with Tether, you can see some stuff happening, so people ask questions. So yeah, I have no idea if they are actually solvent, or if they are doing fractional reserves. They are probably doing, but I don't think that the Bitfinex is any worse of any other exchange for that, because any exchange could do that, and we couldn't know it.
All right. Now, before we get to Jeet on this, because I know he's got a take on this, we for some reason YouTube is just shooting out this live stream to an incredible amount of people. So subscribe to this freaking channel, people, if you like hardcore Bitcoin information. Best guest in the space, and a new show every single day. Jeet, what's your take on this Tether? We've heard a lot about it.
Yeah, there's a couple of different angles. I mean, I think the first angle is like, what is Tether and what's the whole point of Tether? I think Bitfinex is in this kind of class of like fly-by-night operations, where this is just how the space got started. People just starting things up. It kind of turned into something huge. It turned into an actual exchange. I forget the exchange that Circle bought that was based out of, like, I think Boston. But I think it's a similar situation where, because they have this era of non-compliance with US banking laws, people are probably pretty uncomfortable setting up banking relationships with them. Tether was a way for them to bring on board these large institutional customers or people who want to trade in large amounts without having to set up a banking relationships or deal with US dollars. I mean, my whole take on like Bitfinex and Bitfinex and Tether, is that I think this is like from an investment perspective, the way that I would look at it as an investor in Bitcoin is, this is a guy he's an OG. He's been in the space for a very long time. He probably saw what happened with Mt. Gox, where you had the Mt. Gox exchange was hacked. You had the Willy bot, the trading bot that was pumping up the price of Bitcoin, and the exchange was kind of siphoning off those. Is kind of taking advantage of their investors, people who are trading, and siphoning off the trading profits. And I think that's the super high level view of what happened. When people found out and the exchange had collapsed, Bitcoin was in a multi-year bear market. Now, I think, somebody's like pattern matching that to the Bitfinex hack, and they're saying like, look, this is shady. So Bitfinex got hacked. Tether is set up, and Tether is like essentially the Willy bot that's pumping up the price. And people are unaware, and it's kind of a similar situation. So we should sell your Bitcoin. But the problem is that it's kind of there's a lot of people who, when you do this level of research, and he's done an insane level of research, which I think increases his credibility. But when you do too much research, you kind of get too bought into your investment thesis, and the market's completely different than what it was when Mt. Gox collapsed. So Tether, Bitfinex is not 100% of the volume in Bitcoin anymore. It's like it's not a major exchange as big as Mt. Gox was, at least. In fact, most retail people that I know are at Coinbase. Keep it simple. Coinbase, Gemini, Kraken, those are the exchanges that the people I know are invested in. And so I think there's just been a huge step change in adoption, so that, it's not like there's 600 people who are trading a day. There's thousands of people trading per day. And that step change in adoption hasn't really been accounted for in his thesis. So he could be 100% right, and it doesn't matter. Tether could collapse, Bitfinex could collapse. The just market is too diversified across exchanges now for that to have as big of an impact as he's implying. The other thing that I'll say is, I think what really happened with Tether, and there's 6 different levels to his conspiracy theory, and conspiracy theory, but it may be right. But one of the things is that Tether is a fractional reserve. Well, we found out through BitMEX research, and I think Bloomberg also had a piece on this. They traced the cash to that bank in Puerto Rico, Noble Bank in Puerto Rico, through publicly available filings. So we can say all right, well, maybe, was it fractional reserve at some point? Maybe, but now at least there is clearly some cash behind it, and it's backing it. The other thing that's happened is, there's a situation where the peg breaks, and the people who are holding Tether could potentially, take a massive loss. So that'd be 2.8 billion in losses potentially. But what we've seen happen, so we've heard rumors from Twitter and other people that over-the-counter traders are able to convert their Tether to USD. They're able to arbitrage that. So they're able to arbitrage away that discount. But what happened, I think I heard this on Marty's podcast actually, was basically retail investors like me and you were selling Tether, let's just get out of this. This thing's in the news. And the people that would normally arbitrage that away, they didn't have enough time. The selling pressure was so much that they didn't have enough time to kind of close that gap. And so the gap has mostly closed now. And I think the biggest story, which has been widely underreported, if you guys follow Hasufly on Twitter, he had this interesting post where he looked, and you guys can do this right now if you want. Just go to coinmarketcap.com, and if you pull up Tether's markets, the kind of market cap of Tether, you'll see that it declined from 2.8 billion to $2 billion over the last 9 days, or I guess now it'd be 10 days or 11 days. And what that means is somebody is redeeming those Tethers. And if you go on the Tether block explorer, you can see that $600 million of that $800 million went into the Tether treasury. So his whole thesis is that, look, this actually might be the Bitfinex and Tether guys exiting. They're taking advantage of this discount to redeem the Tethers at a discount, and then go and take out the full US dollar. So they're able to arbitrage that away, and they're able to do it at the scale of $600 million.
Whoa. Well, Marty, any feedback on that? Because you got a shout out in that one too.
No, yeah, I agree. Definitely go check out that thread by Hasu. It's a very interesting thesis. And yeah, once the peg was broken for an extended amount of hours over one night, when the story broke, I think it was in the beginning of the week. It seems like a couple weeks ago now. Yeah, there was definitely an opportunity to buy up cheap Tethers, and then it sprung up back towards the dollar peg. So somebody definitely made money arbing that. I don't know who, but yeah.
All right. Well, let's enough of the Tether drama for this week. No doubt, as long as Bitfinex breathes, we'll be hearing about it on Twitter. I did want to bring up another case of drama that just broke, and Jeet, you actually tweeted this one out. So, what's there's a guy out there on Twitter, and I linked to it below, who gives a lot of insider Bitmain information, and he has a new one out there today. First off, what is the new thing he's got out there? And is this guy, is he really an insider?
You know, I don't know if he's an insider, but you guys can go follow him. It's at BTC King 555. He's either an insider or he's just somebody who's kind of in the space and seems to like have a lot of inside knowledge at least. And he had this interesting thing today where, you know, reported that CoinDesk, which is owned by Digital Currency Group, which is Barry Silbert's like investment company, had reported this story where, hey, Bitmain is, you know, misleading investors in their IPO. And apparently Bitmain or Jihan reached out to them and said, like, look, you either drop that story or we'll stop providing liquidity to, you know, one of your sister companies like Gemini Capital or Gemini Trading, I think it's called. And they just dropped the story. So, I mean, it's just kind of interesting because it shows that, you know, there's a risk when you have like a concentration of a few companies, something like a Digital Currency Group. All the companies are interrelated. So you know, it's like the trusted third party that you don't want. Somebody applies pressure to that trading company that needs liquidity from large miners. Bitmain is the largest miner. They say, like, look, you either drop that story in your sister company or we stop providing you easy liquidity. And then the person's doing the math, like, all right, this is like a random media company I have that makes me no money. Here's like a OTC trading desk that makes all of my profits. Which one am I gonna, you know, how am I gonna make this decision? The cost benefit's really clear. So I think it's good to avoid situations where you have those trusted third parties making decisions over your ecosystem. And I think that's why, you know, you just don't frequent or use like any of those types of companies. But I think the bigger story behind this story is the whole Bitmain IPO fiasco.
Okay, yeah, well, that's the thing. You're saying it's a fiasco based on all the stuff we're hearing over Twitter and stuff. I mean, some of that stuff could be true. That's why I asked you: is this guy an insider? Does this guy have legit information? Because he's posted on this Twitter feed. He's posted quite a lot of information pertaining to the IPO. Also, I think that Bitmain is going to be able to pull this off in the long run. I don't know. What's your take on that?
Yeah, so you know, this was like a good catalyst to like learn more about Bitmain and how they do business and everything. It's kind of interesting because you know, I think my perception, the perception of most like, you know, average retail investors in Bitcoin thought that Bitmain was like just the cutting edge of ASIC development. And so, you know, it turns out what actually happened was they released their cutting edge miner, the S9, in 2015. The engineer that designed that left, and then since then they haven't really developed a new, you know, cutting edge miner. In the interim, since that time, they've spent a lot of time in trying different chips and things, but without that chief engineer, they've all failed. So that's actually cost them hundreds of millions of dollars. In the meantime, you know, they've also invested in Bitcoin Cash, which, you know, if you look, you know, and not only invested, they kind of went in hard and tried to maintain the peg with Bitcoin, and that was a failure because people are selling Bitcoin Cash and nobody wants to use that as a long-term store of value because it's obviously a bad investment. And so if you look at their balance sheet, there's basically a massive amount of inventory for obsolete miners, which is all the failed failed attempts to set up new miners. So that's a massive amount of inventory. You have all the Bitcoin Cash coins there, not at their market value, but at the cost it took to mine them. So their balance sheet is total trash. And then, you know, they're going out to IPO roadshows, and apparently they went around telling people that, you know, institutional investors like Temasek, which is like Singapore's sovereign wealth fund, one of the, you know, most qualified sovereign wealth funds in the world, was interested in investing, and they actually released a statement that they're not interested in investing. So, you know, it's just kind of interesting because when you dig into it, like, how has Bitmain been able to maintain the monopoly over ASIC mining over all this period if they have a poor product? And you dig into it, and it turns out like it's really just a classic. They release the product first, and they control the supply chain. So they block out other people from using their suppliers. David Borick, who's one of the Sia coin devs, you know, the Sia coin community tried to release their own ASIC miner, and they were kind of like boxed out by Bitmain pressuring all of their suppliers. And it's kind of funny because, this is supposed to be a decentralized movement and everybody can produce everything. But at the same time, this is like hardcore industrial supply chain sabotage. This is the type of thing that like Apple does. So when they first released their, I think it was like their iPad or something, but they had some massive LCD screen that nobody else could produce. In fact, it might have been like the MacBook's steel case. They went out and they built the machine specifically for that. And then they contracted for all the inventory to produce those machines. So they like locked it down for like a year and a half before anybody else could even compete. And by controlling the supply chain, they were able to have the best product because nobody else could, bring in anything new. And it turns out that's how Bitmain's been maintaining their monopoly. That's not going away because their chief engineer, he started up his own company. There's a couple other people who are starting up their own companies. It's clear that they have their own suppliers now. They're not able to produce at the same scale that Bitmain is yet, but there's competition now.
All right, Marty, is your thoughts on Bitmain? Will they be able to pull off the IPO?
Yeah, I'm sure they'll pull off the IPO. I'm not sure how successful it will be, but yeah, and to go along with what Jeet was saying about the supply chain, like what we're finding is there's 3 to 4 foundries in the world that are capable of creating this, like the silicon that can basically enable ASIC chips with I'm butchering this right now, but below like 12 nanometers. There's only like 3 or 4 foundries in the world that can service this type of chip manufacturing. And the way you work with these foundries is you rent out space on their manufacturing floor. And yes, David Vorik pointed out in that article that Bitmain has attained a certain economy of scale where they can lock down a lot of the time on these manufacturing floors. But with that being said, I think Bitmain is slipping up. I've said it in the past, like I think they're going to be the Icarus story of Bitcoin, where they flew a little too close to the sun. Egos got a little too inflated, thought they had a little bit too much, a little bit more control than they actually did over the influence of these networks and this overall ecosystem. So I think just from poor business decisions in the past, obviously their balance sheet's trash right now with how much Bitcoin cash they have. I think they're going to slip up in the long run. Like Jeet said, there is more competition on the way. And I think this is a good time to actually bring up mining is probably the most centralized aspect of Bitcoin at this point. Like we should be encouraging more competition to get into the space. So it's good to see the designers leave and start their own companies. And then on top of that, there's multiple ways through which we can decentralize mining a little bit further. And that's via the mining pools. So implementing something like Matt Corallo's Better Hash mining pool protocol could actually help decentralize mining a little bit more too. So I would actually like to see a little more discussion around and pools trying to make that happen and bootstrapping that process because as we all know, again, mining is very centralizing. I think it is getting more decentralized. So from the manufacturing side, it's awesome to see Bitmain taking a knockdown, and then on the pool side, I like people to start talking about Better Hash a little bit more.
Okay, excellent. Federico, do you have any thoughts on this Bitmain stuff, or?
Well, Bitmain has been like a very good company for several years. They built their fortune during the last bear market, which was not easy. They were very good at what at their job, and they were the most efficient at producing those ASICs. And if it wasn't for they cut corners, they play dirty, so they really look for profitability at all costs. And if it wasn't for those very expensive mistakes they did in the past year, which was investing in Bitcoin Cash and the failed release of a few of the last Bitcoin ASICs, they will be so big that it will be actually a huge problem for Bitcoin because they will have too much power. Now they also have an investment branch, so they actually invest in a lot of startups. So it's not just about money. They control actually a lot of companies that could become big in the futures. Now they are mostly Bitcoin Cash startups, so it won't be that relevant, I believe. But if it wasn't for the Bitcoin Cash split, they would probably have influence on many Bitcoin startups, which will give them even more power, which is not good. So I still believe that Bitmain will be a major player in the industry for the next at least 5 years because they still have a lot of assets. They still have a lot of know-how. They still have a lot of connections. So even if they did some very expensive mistake, they can still come back to be a profitable company. I'm not sure how the IPO would go. Probably not as good as they expected. But overall, I think that the Bitmain will continue to exist as a big player in the industry. But at least thanks to those few very expensive mistakes, the situation will be a little bit more decentralized. The money manufacturing will be a little bit more decentralized, which is good for Bitcoin. It's good for the value of Bitcoin. So indirectly, it's also kind of good for Bitmain because they have all their companies built on Bitcoin. So it's good also for them that Bitcoin is morality. So yeah, that's my take.
All right, we're getting here toward the end of the show, but I wanted to ask Marty about something that he tweeted out. I found this article very interesting. The Pierre Rochard Buyers of Last Resort piece. Marty, could you speak on that real quick about the concept of the buyer of last resort? I like that they definitely exist in the Bitcoin space.
Yeah, I think what Pierre was trying to do with his article is come from a point where people can sort of understand Bitcoin by comparing it to the traditional banking system. And what he did was compare buyers of last resort to the lenders of last resort, which is the central banks in our traditional banking system. So when we have a crisis and businesses are shutting down and the market needs liquidity, you have the lender of last resort, which is the Fed, which steps in and injects money in so people can get loans going. It sort of stops the deflationary cycle. And then with Bitcoin, you have the buyers of last resort who sort of step in and create a price floor when prices are falling pretty drastically after a parabolic move usually. So yeah, Pierre did a really good job of laying it out. He described 6 different types of buyers of last resort. So it really depends on your situation. There's some people who just dollar cost average every week. They'll buy $50 a week, every week, no matter what the price is. They're creating some type of support. Then you have people who are waiting to buy at a very specific price, whether it be 4,800 or 6,000. It's a certain price. They're adding a different type of support, and he really goes into defining the depth of the order books beyond what you can see on the exchanges. It's really there's a mental aspect to it as well, where hodlers have a certain number in mind where they're willing to buy or sell Bitcoin, and that adds to the liquidity and the depth of the order books.
All right, strong hand, people. Long-term thinking. Pound that freaking like button. Jeet, did you have time to read that one?
I did, yeah. And I thought there was like a couple of charts in the back where he gives you like sample investment scenarios and asks you to guess which is the best scenario for your investment returns. And one is a line that kind of just goes straight up, and the other one is a line that I guess it's kind of wavy and it's not clear. And then there's another line where it's kind of really low, kind of like the situation we're in now, and then afterwards it spikes up. And if you're dollar cost averaging, buying $50 a week, the situation that is kind of mentally the most difficult is the situation where you're kind of at a bottom and you're just hanging around there for a while. There's not a lot of action and you're completely bottomed out. But that's the situation where your dollar cost average buys end up purchasing you the lowest average cost. So versus a situation where you're kind of going straight up, it's actually better for you to be purchasing during these down periods. And I think that's like the whole idea of being the hodler of last resort. I mean, this isn't a company like Bitmain where you can plot out the cash flows and value it like a traditional company. This is a non-cash producing asset. So it's hard to say what price you should buy at because there's no framework for it. The only framework you can use is, do I think it's going to be more valuable in the future than it is now? This is a 70% decline from the top. And the world's only getting more complex. Governments aren't able to really manage their currency. You can see them making poor decisions all the time, regardless of what country you look at. Budgets all over the place, overtaxing people, and their control and ability to maintain capital controls is just declining. So for me, the scenario where Bitcoin becomes a global store of value is only going to get stronger in the future. All the trends are pointing towards that. And so this decline is like, yeah, it's tough, but at the same time, this is actually kind of a good, purchasing. I mean, you couldn't ask for more. So I'm actually I like that chart a lot. And I think that's like a good framework to set people up to think about how they should be investing.
All right. one thing I like to say is that 1 Bitcoin equals 1 Bitcoin. If you think this is value your wealth in Bitcoin, don't worry about what the price is. You think about how many Bitcoin you're going to need in the future. So
it's the only stable coin you need.
It is the true stable coin. Bitcoin is the stable coin. All right. Let's get to everybody's, I guess, final thoughts here. Federico, let's start with you. First of all, Federico, you wanted to mention the Liquid network. Do you have something to say about that?
Yeah, like I've been following the Liquid project for a while, and this week they finally, it was no, last week I believe, they finally kind of released it. So now the blockchain is running, the sidechain is running, and I think it's quite an interesting project. Maybe if you're into Bitcoin because it's completely trustless and you don't have to trust anyone, Liquid is not really for you. But there are many situations when even in Bitcoin, you still have to trust people anyway. So for example, when you move money from Kraken to Bitstamp, you're moving money from an environment which is a trusted environment to another environment which is still a trusted environment. So it doesn't really make sense to use a completely trusted ledger, which is the Bitcoin blockchain, to do this transaction. So the idea of having another ledger, which requires much more trust, because Liquid is a federation, so you're just trusting a multisig between exchanges, basically. For most use cases, you don't want it, but for many use cases, like moving money between exchanges, it really makes sense. It's really useful, and I'm not sure, but yeah, I believe a large part of current Bitcoin transactions are just for trading, for speculation. So people moving money between exchange. So thanks to Liquid, probably we will have less pressure on the blockchain, which will make the fees go down. So we will have a little bit more time to scale, to test the Lightning Network and other scale solution, which is good. And another cool thing about Liquid is that it's a good testing ground for new technologies that they could be implemented in Bitcoin in the future. So for example, in Liquid, it's already implemented confidential transaction, which is a way to hide amounts in the Bitcoin transaction using some zero knowledge proof tricks, which has slightly different security assumptions. So I'm not sure they will be ever implemented in Bitcoin, but still it's good to have this testing ground. They also have implemented this confidential asset, which is the same thing, but you can issue assets, generic assets like Color Coin on Liquid, and have confusion and have privacy both on the amount transfer and on the nature of the asset itself, which is kind of cool. I'm not sure if there are actually many people looking for this kind of application. I think there is a decently sized market, also because if they develop it, they probably tested the market before. But yeah, like if you're just interested in trustlessness, you don't want to make any compromise, Liquid is not for you. If you're using exchanges, Liquid is good for you because you save fees, you save time, because actually it's much faster. I think they can settle transaction in under 2 minutes or something. So I mean, I think it's something good to have. They are not the sidechain that they promised that is in the original white paper, that those sidechain which are kind of trustless, or the peg is trustless, you don't really have to trust anyone. That didn't really happen. But still, we end up with something that is usable in some situation, and is a very nice testing ground for new technologies.
Now, something that you kind of alluded to in that, remember, people, you don't have to participate in the Liquid network. It's a second layer thing. You probably will have no reason to do it. So there are people that are ripping on it for various reasons. Great. You don't have to deal with it. If it breaks, great. It won't affect the bottom layer. That's why you do these second layer experimentations. And again, they're still working on it. And hey, if it's not your cup of tea, then just ignore it. It doesn't break the bottom Bitcoin base layer there. All right, Federico, thank you for being on the show. Was there anything else you wanted to add? Any other thoughts, conclusionary thoughts that you had on any subject matter?
Yeah, I just wanted to add one thing of the topic before about the buyers of last resort. I think one reason why there is so much buying pressure on Bitcoin that supports the price is not just because people expect the price of Bitcoin to grow that much in the future. That's obvious, I think. But I think there are also other factors. It's the idea that Bitcoin today is the only way to actually have control on your wealth. So the wealth that I have on Bitcoin right now, it's not that I'm keeping on Bitcoin just because I'm expecting Bitcoin to grow in value. Even if I knew for sure that Bitcoin is not going to grow anymore, I will still keep them in Bitcoin because I'm not going to put them in a bank, and I'm not going to put them in, all of them in risk investments. So many people, they put money in Bitcoin because that's the only way to control your wealth. You can do it with gold, but I wouldn't been able to, I wouldn't have the capabilities to store gold in a secure way. So with Bitcoin, I can do it. So I think that some of the buying support also comes from this feature of Bitcoin.
Well, I hope more and more people are learning that this is the best way to control your own wealth. Okay, but a lot of people don't want to they don't have personal responsibility. They don't want to even do it. But let's move to Marty. Your conclusionary thoughts, and if you had anything to say about Liquid also.
Yeah, no, like you got, like Federico said, Liquid, and you said, Adam, Liquid is, you don't have to participate in it if you don't want to. I'm very happy that it launched, because it just proves that, hey, at least a form of these second layer solutions exists. They're pushing it forward. Maybe the launch of Liquid gives a team that's been thinking about launching a side chain a little bit of confidence, and they go out and try and do it. Like, maybe if that's all the Liquid does, then hell, good on them. I'm personally not going to use Liquid sidechain. I'm not an exchange. I'm not pushing that much Bitcoin, so I don't really need it. But it is a use case. It is there for the people that want to use it, and it works. So that's pretty cool. Final thoughts? Yeah. Nothing really. Really excited to see what.
No other stories to share or anything. That's what I meant by final. Anything. The floor is yours. Sorry.
No, I mean, this has been talked about enough the last couple of weeks, but it's really cool to see what Samurai and GoTenna are doing with the mesh networks. I think that's really cool. I think that's something that it's just interesting. It's cool. It might not be like get a lot of usage right away, but it is a cool fail-safe to have for if that grid ever goes down in particular areas or something like that.
And it fights that FUD that you and I hear all the time. Well, what if the internet goes down? Bam, GoTenna, baby. That's what you throw in their face when they bring that up.
GoTenna needs to grow a lot more for it to be a viable solution if the whole internet goes down, but slowly but surely.
Well, it's just what you said about Liquid also. Maybe it will inspire other people to build something similar. And I really like that point that you made about the Liquid network. It will inspire other people to do side chains. This is just the beginning. I mean, so we're at a very early time, and there are going to be other great side chain experiments that people will FUD also. But sorry, I didn't mean to interrupt you.
No, yeah, I was going to say it's basically all I have to say. Thanks for having me on. It's a pleasure to meet Jeet and Federico. I've been Twitter fans for a while. You can find me on Twitter at Marty Bent, and I got the newsletter and the podcast. So that's about it.
Yeah, remember, guys, all these dudes' contact information is below. And there's a lot of people watching this show right now, as YouTube sent it out to 500 live viewers. So I don't know what's going on out there. So you guys, these dudes rock, though. We got the best guest in the space on the show. Jeet, I'll let you. You're the new guy to the show, but you rocked it, of course, like I knew you would. You've got an awesome Twitter feed. Any thoughts on Liquid, but any conclusionary stories or thoughts also, anything pertaining to Bitcoin or crypto?
Yeah, I don't know enough about Liquid to be able to comment. And I kind of tend to agree with some of the criticisms. Like, I don't want a situation where we start developing trusted parties. And I think the more people that are transacting on chain, the better. But I just want to say, like, I think, you guys were talking about GoTenna. I think GoTenna, so I actually have 4 GoTennas, and one of the unknown features about GoTennas is, like, once you get the app on your phone, they have like maps that work even when the internet is down. So like, I actually was stuck in California where there's no kind of maps, wasn't able to access cell service. Pulled out my GoTenna app. I had the map already downloaded. It was good to go. We navigated.
The internet just went down. Oh, wait! Look at that! How odd!
we need to switch to a mesh network.
Yeah, now you should have been on GoTenna there. Jeet, what happened?
The internet mafia did not like him talking about mesh networks.
It's hilarious. That is so funny. Oh man, it sucks though. Okay, everybody. I'll give my conclusionary remarks with hopes that Jeet shall return from his. There's a lot. Oh, there. Here we go, guys. Remember, this show, This Week in Bitcoin, is every Friday. We've got different guests every week. You can watch all of the old This Week in Bitcoin shows at techbalt.com, techbalt.com. That's also my Twitter handle, techbalt. All these guys' Twitters are linked to below. Also, disruptmeister.com. I post a new show here every single day. Saturday's show is the Beyond Bitcoin show. That's on Saturday night. So tune in if you want to hear about stuff way beyond crypto and Bitcoin, philosophy type of stuff. Jeet, are you back?
I think I'm back. Can you guys hear me?
Yes, dude. So now, yeah, you were talking about GoTenna and the California situation. Take it away.
All right, so completely lost, and the GoTenna app, they have a map right there, and it helps you navigate out. I think GoTenna and Bitcoin fall in that same category of stuff that it's just like it just increases the negotiating position for just normal people. So I don't know how to use, like let's say Google Maps, they don't like me, they shut off my Google Maps. Now I have my GoTenna maps, or communication-wise, I have GoTenna. Same thing with Bitcoin. I think that the uncertainty is only increasing in the world, and central banks want you to either invest in assets or use their currency, but most central bank-based currency is very poor, and it's not like a good investment. And so instead of placing your life savings and wealth in the hands of people who are kind of generally incompetent and don't have a good track record, you just place it in Bitcoin and feel completely safe. And I feel like that kind of improves every human's negotiating position, and that just makes me super optimistic. And I think GoTenna is part of that. And I just feel like the negotiating position for the average person in the world is just increasing every day, and it's only getting better from here.
All right, people. That's why you're getting into Bitcoin, but not everyone's opting into Bitcoin. Some people opt to stay into the old fiat system, stay in the matrix. They're happy with the blue pill, but hey, 20%ers, come on over to Bitcoin. People watching this show, bang that bell button so you get reminders. Subscribe to this channel, new people. I'm Adam Meister, the Bitcoin Meister. Everybody, have a great weekend. We will see you tomorrow. We'll see you next Friday. Shabbat Shalom, as we say. Bye-bye.